In this video, traders are going to look at 6 patterns that set up nicely when they fail. Stay tuned. Hey guys, warm welcome to Alright, so real world trading, all very nice. You read the textbook, you're thumbing through and it says, yes, you know, when you get a breakout, you buy above, you trail the stop up and you capture the profit, you look for the next one and you think, great, off you go. And then you get into real world and charts don't look like that. Breakouts happen when they do. If you pick a nice one, they're great. Very often they're faking out. Some of the patterns don't work all the time. They've got slight edges under certain conditions, but other times they fail. And sometimes the failure of a pattern actually creates another pattern which is even better than the original one that was going to work, if that makes sense. So anyway guys, I've got 6 for you here. If you've got any others you can think of that are failures of traditional patterns, so to speak, then let me know in the comment section below, and also let me know what you think of this video. Right, so first one is this: pullback on a daily trend. So you've got a daily time frame here. Market's chugging along. Let's say you've got a 20 period moving average or some kind of pullback. And normally, right, we're going to buy that pullback. Nice pullback on trend, and I've bought these myself and you probably have before, and very often they work nicely. But sometimes they do this. They come down, and they just accelerate and accelerate and accelerate and accelerate. And actually, that acceleration, that failure to actually go to highs and be more of a V-shaped top or an N-shape, if you look on it on the other way around, can actually give you a decent trading opportunity. Because what you're looking for there, in the middle of this kind of downdraft, a multi-day downdraft, would be something like, you know, a little pullback on a 15-minute chart into the daily time frame. So everyone's expecting that to keep pushing higher. It's a strong trend, it's pullback, and then it just rolls, and it tends to do it slowly. It's like creeping, couple of days, and then you start getting solid red, solid red, solid red. So maybe you don't trade it from a swing perspective, but maybe you go intraday and go, right, you know, there's a failure to push to highs. It's a trend failure on the higher time frame. Now I'm going to hammer it on the short side on the lower time frames and try and get some intraday trades from that. All right, so let's look at something else. Number 2, inverse head and shoulders. You know, head and shoulders, left shoulder, right shoulder, head in the middle, and the idea being that you buy when it breaks the neckline, and some people like to extrapolate out that distance and go, hey, there's my target, and trade it that way. Now, they can work nicely, but they work better, I think, when they fail. So they come up, everyone's all aboard, off we go, they're all looking for that level. This is number 10 in the page 10 in the textbook, of your average textbook, as your head and shoulders. No deal, fails and rolls back over. In which case, there you are, you can start pushing the shorts as we break back through, or if you wanted to, as we start to break these kind of levels, then you're really getting less and panicky because everyone's thinking, oh, that was great, and actually it's not a reversal at all. It's going to keep pushing lower. So when that fails, that can be quite a good one. Here's another one of my favorites, guys, number 3. This is when we get a breakout of a range, and I've talked about the rules of this, the filters of this, the triggers of this. One that will know is very familiar with this, but just to keep a broad overview for this video, we have a break to the upside, fails, pushes to the downside, bang, straight through. And that's quite nice because that's trapped a lot of people long, and very often the nicer trades on the short side, you're either taking that there or you're trading it as you break through there. Number 4, a gap. If you get a stock that's gapped up on earnings, great, all looks good, everyone follows the gap. The next day, it kind of starts to push back through this low. That's the key level, that low. Once we start doing work underneath that, after doing work very much to the high side, all bets are off, everyone's panicking, everyone's loaded the boat on that, expecting it to come up here, is now sorely disappointed. We're running out the door, as well as the supply and demand imbalance to the sell side. So that's a good failure one. People like to follow the gap, and if it fails and starts to roll over, good one to get short on, and vice versa as well. This is one for you day traders, intraday. So generally nice steady uptrend, people are expecting the pullback. So similar to this, but this is more of an intraday perspective because we're looking at where it closes. We're not looking where it closes here because it's a daily chart. It's an intraday chart, pushes up, pulls back, maybe through some mean or a VWAP. A VWAP probably would be more like this, but you get the idea, and closes low. Now, even better if it closes at all-time low, through the low, but if it closes low after pulling back, that's got a few people trapped because the setup was for people to buy this pullback for a late afternoon drive up, which is often what happens on trend days. You get a pullback kind of lunchtime, then it continues off the rest of the day, closing at highs. This doesn't happen. Sellers are taking advantage of that premium. It's hitting the lows at close or closing relatively low, maybe not full lows. Next day, expect some follow through. Good one to get on the short side. when the failure of the trend to continue with that one. Okay, number 6, guys, this is a trend channel. So we've got a channel that's sloping downwards. We're going to break out to the downside. Everyone's on that because everyone expects a break in the direction of the trend, and they can be very nice and very powerful, don't get me wrong. But when they fail, very often you get a very solid move back up the other way. It's almost like an exhaustion, because people are framing it in the direction of that and looking at it in the bigger picture. But actually, this is what we're looking at, that down move after the up move. That's what we should isolate and go, that's actually a very big down move through some support, through the prior low, through the trend line low. If that then reverses, the very good chance it's going to break through that high and you've got a better long trade. A lot of people trapped on the short side of that one. All right, guys, those were 6 patterns that set up nicely when they actually fail. Take care. See you next one. If you like this kind of stuff, guys, thumbs up, appreciate it. Bye-bye.